Welcome to the channel, guys. With trading plan for the upcoming week as we do, let's dive into fundamentals first. Despite slight upticks in CPI and PPI, the spotlight was on ECB President Lagarde. As expected, she delivered a 25 bps rate cut, but her hawkish tone on persistent services inflation sent the euro soaring, driving the dollar index down and fueling gold's surge to new highs. Markets quickly turned to the Fed's September 18th meeting, with rising expectations for a jumbo rate cut. Geopolitically, there's been a notable calm after Secretary Blinken signaled a 90% likelihood of a Hamas-Israel ceasefire. With central banks easing post-COVID inflation pressure, crude oil is set to bounce back, supported by delayed OPEC supplies and central banks' growth-driven policies. In the US, Harris was seen as the winner in her debate with Trump. However, the dollar's weakness and Bitcoin's rally tell a different story. Despite the debate win, global sentiment still favors right-wing shifts, casting doubt on any significant boost for Harris. This week's focus shifts to the Fed, Bank of England, and Bank of Japan. The Fed's decision on rates, the dot plot, and economic projections will take center stage, with Powell's press conference in sharp focus. A 50 bps cut seems unlikely, especially with elections approaching. Anything more than a 25 bps cut would indicate panic, signaling a deeper recession risk instead of the Fed's targeted soft landing. For gold, while the bullish trend may continue until FOMC, I anticipate a pullback if Powell leans hawkish. If you picked my hint from my fundamental views of last week and went long at 2,505, consider booking profits around 2,600. Should the rally continue, sell at highs near 2,600 with a stop loss above 2620, targeting a 1,000 to 1,200 pips drop. This plan remains valid until the FOMC, after which it may either continue as expected or reverse entirely, depending on the Fed's decisions. Trade with strict stop losses and be prepared to switch between long and short positions as market sentiment shifts. Bond yields and dollar index likely range-bound until the FOMC. Given my expectation of a hawkish stance from the Fed, I am bullish on both. Euro, cable, and Ninja, bearish outlook until the FOMC due to my bullish view on the dollar. Gold, expect high volatility, with a bullish trend leading up to the FOMC. However, I'm more inclined to sell at overbought levels due to my bullish dollar bias. Silver, similarly volatile, with additional pressure from uncertain Chinese economic growth. Crude oil, supported by OPEC supply controls and global easing cycles. Recovery from lows is likely to continue. Bitcoin and Ethereum, expect extreme volatility as the FOMC and US presidential elections weigh heavily on both sides. Thanks for watching, and I hope you follow my trading plan and earn handsome profits. If so, do not keep it to yourself and like, subscribe and share for the greater benefit of trading community at large.